Naeem Aslam is the Chief Investment Officer at Zaye Capital Markets. Thank you very much for joining me. Well, the markets do seem particularly resilient. Why is that, in your opinion?
Thanks for having me. I think there are a number of factors. Number one is, of course, the AI trade, because the whole rally is very much driven by certain stocks, and then that is pushing the S&P 500, or if you're looking at Dow Jones Industrial Average, or whether it is your NASDAQ. However, we cannot afford the fact that a large number of investors are completely sleepwalking into a complete disaster. Now, let me explain what do I mean by that. What I mean by that is the two important numbers. One came out last Friday, and that is your consumer confidence at the lowest level, something that we have not seen in 2007 during the financial crisis, something that we haven't experienced during the COVID crisis, something that we haven't experienced at all. So that is the number, that is the level that it has dropped. Number two, the PPI data came out a few weeks ago. That is a storm that is yet to hit the market in terms of the inflation numbers. And I'll give you one final bonus point, and that is to do with your interest rate expectations. If you look at the predictions market, you can clearly see, or the futures fund rate, that the Federal Reserve, the chances of them of increasing the interest rates are sitting at quite a high level that we have not seen. So investors are completely being ignorant, or they're just sleepwalking into this disaster.
You've drawn a fairly depressing picture there. How worried should the global markets be over this prospect of a conflict-induced recession?
I think we are just being realistic rather than, unfortunately, that is the reality. Now, how smart money is moving on the back of that smart money is hedging. It is hedging in terms of two different strategies. Number one is, if you are trading on a day trading basis, i.e. you are not carrying risk overnight, because any tweet, any outcome can change everything in relation to that one. If you look at today's president's tweets, now he is asking the allies who are mediating all the conversations, the whole Arabian and including Pakistan, to become part of the Abraham Accord, and that's becoming a condition. That is a huge, either a disaster, a ticking time bomb, which is going to happen, or that would bring the biggest relief rally ever, and then President would get a Nobel Peace Award if that happens. Now, number two, in relation to the markets, you wanted to hedge this particular risk. You do not want to own equities in terms of the long-term exposure. Yes, you do want to trade in terms of those particular stocks where president is tweeting, because that is an unusual and uncharted territory, because we've never seen a sitting president sitting and tweeting about stocks or taking positions in stocks in his portfolio. So you do want to take an advantage of that. You do want to take advantage of AI boom which is taking place. But you need to be selective in relation to what you are investing and then what you are carrying in terms of a risk overnight.
I want to talk to you briefly, if I may, about oil prices. Now, they've fallen to below $100 a barrel. Are things likely to stabilize at that level, do you think?
Not necessarily. Absolutely not. And I'm sorry for our party people over here, but that is the reality. Oil prices at 60 represents a completely different picture. Oil prices below $100 but above $90 represents a completely different picture. You are still more than half above the average price that it was. It's not going to bring back anything that quick. I think we are still going to see, we have not seen the actual reactions. When was the last time that you went for a in any of those supermarkets and then you've experienced, wow, okay, all of a sudden my wallet actually has more wounds than it was before, because we haven't recovered from the wounds that have taken place since COVID crisis, right? Because inflation is permanent fabric of this particular price action that we are seeing now. Now, with the fact of the Iran war, anything which is going up is going to stay up. We may see some relief, but inflation has unfortunately moved to a different level, and a large number of people still have to come to reality. And then I'll just give you the last one, and then I'll just call it a day with that one. And then that is the summer holidays. Among your friends or any of your viewers who are watching, you will see summer holidays are not on the agenda. The borrowing in this country and the borrowing in the United States on the credit cards is sitting at a record high. And that is something that you need to take into consideration before you make any investments into that one, or if you're thinking of a disposable income.
Naeem Aslam, thank you very much indeed for that.
Thank you.